Hello, welcome to another episode of the Ikan Bilis Weekly Forecast Show. Our weekly forecast is published every Sunday, 4 p.m. UK time to help you navigate the sea of market volatility. Please subscribe and click the like button before we dive into the charts.
Hey people, I've got something good to share with you guys. Bilis has launched a prop trading service and we are now looking for talented traders to fund. You can trade Forex, crypto indices, and metals with the accounts using the MetaTrader 4 application. We have the friendliest evaluation criteria in the industry that sets you up for success. All you just need to make 10% on your account in 60 days and make sure that your trade sizes are consistent and within a reasonable risk parameter. Most prop trading firms split up their evaluation into two 30-day phases and require a 10% profit made on each of those phases. In my opinion, that sets up traders for failure and forces them to take unnecessary risks on the account. Furthermore, we allow you to earn from the get-go. Yes, we reward you for good trading even during your evaluation phase. So wait no longer. Go ahead and sign up for an account at ikanbilis.capital. We're now giving out free challenges for a limited time only. Please join our Discord channel to say hi and find out more.
Alright, welcome back to another weekly analysis. Yeah, as usual, this week we will start with the Aussie dollar. Last week we presented two possible scenarios for the Aussie dollar. I presented the more likely scenario as a rebound from this level. There's some reaction of these levels, but you can see price quickly dump back down to retest the bottom, which is the other scenario that I put up. So after retesting this bottom of the channel, then it started to find its way to the upside. And I think this is largely caused by the Australian Central Bank's hawkish stance to raise rates to fight inflation and also to react to the Federal Reserve of the US raising rates and hot money flowing out of the economy. So I'll say for the weekly, this is a fairly bullish sign and I expect this bullishness to continue. However, this up move might not come as smooth as we expect because there are other events that's coming in the weeks and months that might make the move towards the upside choppy. So for example, on the 30th of May, there's GDP data from the US, and if the US economy is still doing strong, I think it's fairly bullish for risk on assets, because if it's doing strong, then it means that the monetary policy stance from the US doesn't need to be changed, in the sense that there's nothing wrong with the economy and therefore let's not reinvent the wheel, right? And there's also an inflation data coming out in the middle of April, and that will very much kind of give us a heads up as to what the Federal Reserve might do for their May rate hikes. So I don't expect the Fed to slow down their rate hikes. I think Jerome Powell did mention that there will be 6 more rate hikes to come this year, and yeah, but even with the 6 more rate hikes, the interest rates will be very much lower than in, I think, 2018 when they completed their as in when the interest rates was at the same rate as what it will be by the end of this year. So depending on what the Central Bank of Australia does to react to this, I think the price will definitely move up. But as every time there's an event, the price may have a shock and then slowly grind its way upwards. So I think this will be pretty much similar for most major pairs that are traded against the dollar.
We've come to the end of the video. If you think our content is useful to you, please like, share, and subscribe. Our Discord channel is up and running, and it's the best place to stay current with our latest updates. See you there, or until next week.